This content is brought to you by Uphold, which is a great platform that makes crypto investing easy. You can buy, sell, trade, and earn cryptocurrencies on Uphold. They have 10 plus million users, over 200 plus cryptocurrencies, and they're available in 150 countries. I personally use this platform since 2017. They're one of my go-to exchanges. They also offer equities and precious metals that you can invest in. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is John Palmer, who's the president of Cboe Digital. John, great to have you on the show.
Great to be here, Tony. Thanks for having me.
John, I'm excited to speak with you because Cboe has such a strong brand and legacy in the financial markets, and now you're dabbling in crypto. So lots of questions for you and lots to talk about with the market, with FTX and much more. But let's start with your background. Where are you from? Where'd you grow up?
Yeah, absolutely. So originally from Ohio, I actually grew up in kind of farmland, Northeast Ohio, very small town, and I moved to New York about 15 years ago to get into financial markets after doing my education and a couple undergraduate degrees and jobs, and slowly found my way into the exchange community in Cboe.
Mm. And you were at Cboe for a good amount of time, and then you left, and then you came back, and now you're president of Cboe Digital. Can you tell us about that?
Yeah, 100%. I guess they call me a boomerang employee, maybe is the right term. But yeah, so I joined Cboe as part of the BATS acquisition in 2016. Spent a lot of time working through the technology migration of the Cboe exchanges, the futures and the options exchanges onto what was referred to as the BATS technology at the time. And then after that, I moved into more of a business-facing role in the U.S. listed options side of the business. Did that for about 3.5 years, give or take. And then crypto kind of caught my eye. The market structure was starting to evolve, certainly growing. A lot of folks migrating and trading crypto, and I looked at it and said, I've learned a tremendous amount of things over my time building derivatives-based exchanges here in the U.S. There's still a lot of maturity that I think that the crypto exchange and markets landscape can bring and value to customers. And one of the things that I've learned that I can join the crypto regs or the crypto native regs maybe and help drive the industry as it continues to grow and mature. So I took a shot and jumped into crypto. Worked at an international platform for just shy of a year, running product strategy globally for them, and that included working with institutions and retail traders, building applications, building NFT marketplaces, kind of all the things that are the hot topics amongst the retail crypto native folks. And then, as you mentioned, Cboe acquired ErisX. That deal closed in May of this year, and we recently rebranded to Cboe Digital in October. But before that, an opportunity presented itself for me to come back to Cboe but do the crypto thing that I had been doing for the past year. So it was a really great opportunity, and I was really excited to say, this fits the mold for me really well. I love my time at Cboe, and I love what Cboe is doing in traditional markets. So I can now come back and do the same thing, but in crypto, and that seemed really exciting to me. So here I am.
For sure. So on the note of, when you first discovered crypto, what was that? What was your first encounter? Everyone has a different story. Sometimes, hey, I saw it on a forum, or someone told me about it, a friend told me about it. And what was like your aha moment? Like, okay, I get it. It's not a fad. It's not, some random magic money, but technology and blockchain and crypto and so forth.
Yeah, I would say it was probably a little bit before 2016 or so, as the crypto landscape really started to develop. I saw it the same way, the technology piece, and I think it was just through kind of osmosis, right? You see it in the news, folks are talking about it, you get curious, and so you do your own little digging, and for me it was the technology and the applications to modern financial markets. I've spent my career in equities and equity derivatives and index derivatives, and what are things that are center in crypto, call it distributed ledger technology or blockchains, and how can those be leveraged maybe in these very robust and resilient markets, but how can we use that technology and make them better? And so that was what really interested me to start. And then while I was at Cboe, I was working on the business strategy side for the futures exchange CFE that we have, and we were the ones that launched the first Bitcoin contract back in 2017. And so I was actually part of that initiative to bring that to the market. So I was probably my first real foray in the business, even though at the time I probably didn't consider it. When I do a retrospective, I'm like, well, I actually was in crypto a lot earlier than I was really in crypto. And then from there, post that, my interest in it just kind of grew. And so again, through my own personal time, I, read about it and learned about as much as I could as the time presented itself until I made the jump into the deep end. And so then that's really where all the learning really started to happen. Once you're doing it every day and it's part of your job, you're kind of committed to picking it up pretty quickly if you can.
So the Cboe brand and of course exchange and the services you offer have been around for a long time, well-established brand, well known in the equities markets. What was like the catalyst for them to say, what, we like this new asset class, which is crypto, and we want to build something that supports it, kind of what you alluded to and some of the work you did there. What was that catalyst? And this may be a difficult question to answer because it may be involved multiple folks, but maybe what's the vision for Cboe and crypto?
Yeah, so first, you mentioned Cboe. We're a global multi-asset exchange operator, and so that has been something that the company has grown into over call it the last five years post the acquisition of BATS. Cboe Europe, and now through Cboe Japan and Cboe Australia, and then into different asset classes with the purchase of Hotspot, that's Cboe FX today, and then now into digital with ErisX, so the Cboe Digital acquisition. And so from a Cboe umbrella perspective, we want to operate competitive, trustworthy, reliable markets in asset classes broadly. So,
Sure.
when you look at the global financial system and you look at all the different asset classes that are out there, if there's an opportunity for us to compete and offer innovations from a technology standpoint, compete on price and drive value to the end investors and customers, then we want to do that. And so we could say that broadly across any asset class. I wouldn't say crypto's any different. So in the Cboe lens, getting into digital, especially as it starts to mature, in my mind, it's a slam dunk because we're already operating very regulatory mindset type markets globally, and we believe that's the value and the way to really unlock further growth in digital. And the reason why I say that is because you really want to instill confidence, and you really want market participants to have the same experience that they're used to having in a lot of the other asset classes that they operate in today. And so when we look at saying, hey, we want to operate in digital assets, we say, let's do it the same way we're doing it in all the other asset classes. So that's the genesis of it, really.
Yeah, that absolutely makes sense. And I guess my next question is going to be, because it's just so timely with the collapse of FTX, and we see within the crypto industry specifically, there are some missing regulations and guardrails in place. There are some. So does this collapse with FTX really help usher in more of the traditional financial folks like yourself to come in and grab market share and bring, to your point, that pedigree of regulation and accountability and transparency and things like that?
Well, I think we certainly can say that we're seeing a call to action from, not only lawmakers and regulators, but also industry participants for us to figure out, what the next pathway or the next steps are in the industry, right? So you mentioned, the regulatory clarity, I think, is something that a lot of folks are asking for. You could get down to the end result of, a lot of people say we need to define, what is a security versus what a commodity is. That's probably something that we'll ultimately solve at some point in time, but I don't necessarily think that we need to solve it today. I think, to your original point, I think providing a framework, guardrails, a box, whatever you want to call it, that allows participants to operate. And what I mean by operate is, either operate an exchange or operate a prime broker division, or offer services to their customers in a way that they can get comfortable with, that they know that they can do without any sort of enforcement or any sort of legal action that is going to take place regarding their services, is really important. And I think what that does is it unlocks a tremendous amount of opportunity for a tremendous amount of firms, specifically in the US, that want to do that, but maybe are unsure of how they get from point A to point B, because there is no kind of clarity that provides them that. And so, when we think about Cboe Digital, we look at it the same way. Is, we want to operate an exchange and a clearinghouse in digital, provide us with, guardrails that allow us to do it across, tokens, and we want to do that, and we want to do it in the same way that we operate all the other markets and all the other asset classes. That trustworthy, transparent, regulatory first kind of offering and mindset.
So, John, I've been talking about this, and I don't know if you agree with me, but it seems that this FTX collapse is kind of going to open the door for institutions such as yourself to come in and have a bigger presence in the market. And it's kind of like, okay, the kids had their fun, but the adults are here. Do you feel there's some sense of that? And I may be off base here, but just from my own personal views.
I think it's certainly one way to think about it. I might maybe put it in a different lens, in the sense that, crypto has grown so quickly, and we've seen the industry go through what you would call, maybe market cycles at a pace that is much more accelerated than what the same types of cycles we've seen, in some of the more traditional financial markets. And part of that may be paired with maybe some of the, regulatory uncertainty, and you have to think this kind of started in a currency kind of world, or an FX almost kind of world, and you have regulatory authorities that maybe don't have the same exposure or experience in a full kind of equities or equity options or commodities based marketplace, learning and growing just as much as retail and institutions are learning and growing with crypto. So you have all these, the entire world is really, trying to keep up with the pace of crypto. And so what we've seen platforms, you call them platforms, kind of fill the gaps of services being offered to customers. You say, hey, I need to grow, I need to go get 1 million customers. How do I do that? I'm an exchange. Okay, well, I need to develop an app. I need to start being a retail broker dealer. I need to be an FCM. I need to be an intermediary. I need to be a prime broker. Whatever other services I might need to, because the traditional players that offer those services and all the other assets haven't got there yet. Right? They're bigger companies. They have huge roadmaps. They're looking at it, but maybe they're a little bit slower to move. And so we've seen that happen at significant pace in the entire global picture for crypto. And so I think it's put pressure on the industry, right? And so you have this kind of, centralization of all these services that are typically separated and separated with oversight for a purpose, being centralized, that I think has added a tremendous amount of systematic risk unnaturally to the system, and so you start to see some of the things that we've seen over the last 6 to 8 months happen, and these aren't crypto specific things that we see them, and we've seen them in the history of financial markets time and time again. The key is where do we go from here? What do we learn? How do we do it better? So from my perspective, I want to operate the same way we operate in equities and in options, as an example. And I think we're starting to see at Cboe Digital that folks are getting that, and that there's value to that.
Mhm.
And so we're really excited about the next steps in the pathway, even though those are, coming off the back of, really unfortunate kind of industry events.
Sure. So let's talk about the Cboe digital services that you offer. Can you tell us about the different services and products and solutions? And is it mainly for institutions or also retail?
Yeah, so we offer a spot and derivatives platform to trade crypto products. Our spot platform, we have 51 states and territories in terms of the MSBs and MTL type of licensing, to be able to service customers really across the U.S. And then our derivatives offering is regulated by the CFTC, so we operate an exchange and a clearinghouse under their oversight. And so our model is an intermediary focused model. So we want to work with the retail broker dealers, the FCMs, the intermediaries that customers are accustomed to working with today. Having said that, we do support directly onboarding with retail customers too. If they'd like to come trade at Cboe Digital, we've built that capability, and part of the reason was to do that was to help prime the pump, so to say, as we wait for some of the other larger intermediary partners to get into the space. But ideally, we want to service our intermediaries. They're the experts
Right.
at the services they provide, and we want to leverage their expertise and let them to know the customer, and then let us be experts at running an exchange. And then on the derivatives front, we offer Bitcoin and Ether based futures trading. Those futures are fully funded, and in the US framework, that doesn't provide any leverage. And typically, people use derivatives for, especially when it comes to speculation for purposes of leverage. And so we're actually working with the CFTC right now to have approval, or to gain approval, to offer margin based futures trading in both Bitcoin and Ether. And we've been working with them this year, and we believe we're in the final stages. And hopefully sometime next year, hopefully early next year, we'll be able to bring that product set to the market as well. And so we're really excited about that.
And I remember you mentioned earlier before that we are still waiting from like the SEC to declare what is a security and what's not. There's thousands of other coins out there, but even in the top 50, there's not clarity outside of Bitcoin and Ethereum. So I'm assuming, like many other companies, you're in a holding pattern until we get that clarity, right? To add more tokens.
Yeah, we have a very pragmatic and I would say conservative approach to how we list tokens to trade on the platform. And as you just alluded to, we list Bitcoin and Ethereum. We also list Bitcoin Cash, Litecoin, and then USDC. But those are the five. So there's a good chunk of the top 10, the top 50 that we currently don't list. That we do hear demand from institutional investors and intermediaries in the market to say, I want to trade Cardano, Solana, a lot of the layer ones, a lot of the other top ERC20 based tokens, and we want to be able to offer them the access to that on our platform. But I think to your point, the guardrails I think are really important for us to be able to do that. So we're looking forward to working with the industry and the lawmakers and the regulators on on that process as we kind of march forward together as an industry.
Any plans to throw your hat in the ring for a Bitcoin spot ETF? It seems everyone's trying to get that. The SEC has not approved one yet, but just curious, given an institution of your caliber has the history and a lot of the regulation, traditional financial regulations in place.
So I think what we want to make sure that we do is we want to make sure that we offer the services and the platform that allow participants that want to offer those ETFs to have really the same type of financial systems available for them to use, to be able to present that to the SEC in this example, to say, hey, we want to do this ETF and this is how we're going to do it, and these are the partners we're using it. Cboe Digital potentially could be one of those in terms of the exchange and the services that we provide. So again, I think, going back to the platform-based approach, we're very cautious, and we want to remain focused on, what our mission is, and that's exchange and clearing, but also heavily working with industry partners, to grow the ecosystem. So if and where we can work with, custodians, asset managers, participants, that want to create a spot ETF, we're happy to service them in the way that we would service any customer. But we believe that our platform, our model is the type that's where you'd want, to trade, and to hold your custody. So we're hopeful that we can continue servicing those customers as they drive that.
For sure. On a note of custody, obviously that is a big and relevant item for many exchanges and platforms, and users are now, more hyper aware, I think, just because of what happened with Celsius, Voyager, and as well as FTX. So can you tell us a bit about how you're custodying the crypto? Are you using an external custodian, hot and cold wallets, and how that's set up?
Yeah, so we actually use BitGo, as our custody provider. So we don't custody ourselves, and BitGo is a qualified custodian. So, they've been a fantastic partners of ours as we build our platform. And so the important part for us, again, is to, maintain that independence and that separation of duty. We feel that adds a lot of value to the customer. We do work exclusively, or we work with BitGo. Our technology is agnostic in terms of custodian providers. So as we see, the custody grow in the world, there's opportunity for us to offer additional custodian providers in the future as we grow based on demand. But that's something that, from our perspective, is not in, necessarily our purview. And then, every custodian offers services a little bit different. You talk about hot versus cold wallets. So we have both. Traditionally cold is very difficult to do, and very difficult to do well, and very difficult to access, which is the entire intent of that. And so we leverage that as much as we can. We want our customer assets to be safe. And so as we think about expansion of custody in the future, those are the types of things that we look at, in terms of the custodians that we want to use. And I would expect those will be the types of things that matter as we get, regulatory clarity, and additional, participants enter the custodian space, right? I'll point to, you have Anchorage, you have Bank of New York Mellon, very large traditional custodian getting into the digital custody space, and I'm sure there'll be more to come as the months and years kind of churn through.
A question just came to mind because I remember following ErisX, which of course you guys acquired, and they were partnered with TD Ameritrade. I remember TD Ameritrade had a page on their website talking about how the clearing and all these things are done through ErisX. Is that relationship still there? Are you guys connected to TD Ameritrade or any other major partners that you can highlight?
Sure, yeah, absolutely, and it's a fantastic segue. I think, one of the things we just announced yesterday evening, via press release, is the closure of our equity syndication process, which is brought together 14 industry partners as equity participants, and minority shareholders within Cboe Digital. And so, I won't go through the full list, but it's a really fantastic cross section of industry participants that are, maybe some folks would consider traditional finance type firms, and then obviously crypto native type firms in there as well. But it also spans from intermediaries and retail broker dealers to market makers and proprietary trading shops. And the purpose of this is to really help Cboe Digital mission in terms of growing a regulatory first, transparent and trustworthy market in digital assets. And I think another important piece of this is, in the light of significant industry events, it still shows the convictions that very major players in the industry have in the future of digital, with this partnership with them. So, there's firms in there like Robinhood. There's firms in there, like Vert2, B2C2, to name a few. I don't want to it's a fantastic group of firms, that to your point, I think we'll continue to work with as they build out their services and products for their customers, and we service them as an exchange and clearinghouse.
From your perspective, as someone who's been in the financial services market for a very long time, obviously Cboe, once again, just very well established. And this is a hard question, but I'm just so curious, from your perspective, where do you see this asset class, this market in maybe 5 years? And not necessarily price predictions, but as far as growth and adoption and things like that, do you see any commonalities with past the traditional equities markets, even though that's been around for a longer time?
Yeah, and I don't have any numbers in front of me, and I wish I did, because I'm a big fan of using the quantitative side of the fence to kind of help drive some decisions, but if you think about the assets under management, or the type of numbers that churn through some of the modern financial markets like equities or equity derivatives, one stat that I think rings out to me, and I don't know what the last week or so has shown, but in the international or in the global derivatives world for Bitcoin and ETH, they're trading roughly $80 billion a day, maybe per 24-hour period before the FTX collapse. And when I think about what that notional number means, and comparing it to modern financial markets, it's a comparable to maybe the size of the SPX options complex that trades at Cboe. And so there's only a small amount of that trades in the U.S. Kind of arena. If we look at what Coinbase offers, or what LedgerX offers, or what CME offers, we're in the single billion digits or below. So there's clearly a huge opportunity for U.S. investors, institutional and retail investors, to gain access to derivatives, and even gain access to spot. And I think also, when I think about numbers, if only 1 or 2% of all asset managers in the U.S. wanted to get into crypto for diversification reasons, or what have you, there's a tremendous amount of money that would flow into the industry that currently isn't there. And I think those numbers would likely dwarf what we're seeing trade even in the global arena today. And so I don't necessarily look at it as, let's start up an exchange and grab market share from someone. It's more of, let's start up an exchange, and let's grow the pie. Because I think if we do it the right way, the pie will grow significantly. And, we're not really going to be fighting over market share per se for the next couple of years. It's going to be more, there's so much growth and so much opportunity, that, let's just continue trying to offer the services the right way to customers as they get more involved into the space.
Yeah, and I think a lot of folks are waiting to have the derivatives access, because I think, look, there's a lot of people I know who use VPNs, and they go to exchanges offshore, which that should be happening in the United States. They should be trading in the United States, but hopefully the regulators can get it right.
Yeah, and I mean, I would never tell anyone to do that. Clearly, there's reasons why you're not supposed to be able to onboard with those platforms. So clearly they're taking risk, in terms of doing that. But our goal is to hopefully, bring those types of products to a U.S. based platform, that they can have confidence in trading in. So that way they don't have to use that VPN, and they can use, whatever broker dealer account they have today, whether it's Fidelity or TD or Robinhood or Interactive Brokers or Tasty Trade or Webull, whatever it is, to access crypto. And so that's really, I think, the exciting growth, at least when and I'm only looking at my US lens, over the next hopefully 12 24 months.
For sure. So on that note, what's on the roadmap for 2023? I know some things may be under wraps, NDAs and so forth, but any hints as to what we can potentially expect?
Yeah, I mean, first and foremost is the margin-based futures that we talked about. I think that is kind of our entry point into derivatives offering for U.S. customers. Beyond that, we'll look at other styles of derivative trading. Clearly, there's very popular products internationally,
Yeah.
and so we'll look to see whether or not there's an opportunity for us to offer similar products or similar types of exposure to customers in the U.S. Options is a fair play. That there's some platforms that offer options today. We'll likely look at that and say, hey, can we compete there? Does it make sense for us to offer options? And then I think, as I alluded to earlier, it's we want to remove as much friction to customers trading in the crypto ecosystem as much as possible. And one of the biggest pieces of friction is operational efficiency and capital efficiencies. And so where we can leverage our clearinghouse to provide services and other sorts of offsets or collateral type services that enhance those or bring efficiencies there for both on the operational side and the capital side, I think are really important. So, example, today our clearinghouse offers, takes in USD collateral. We want to expand that to treasuries, which is a pretty normal course of action for any clearinghouse based in derivatives under the CFTC in the U.S. And then beyond that, it's what other types of collateral can we bring in that is going to drive efficiencies. Our platform's built for spot and derivatives. As we grow that pie, if a customer is trading across those assets, what can we do to provide them more efficiencies? If you're holding Bitcoin with us and you want to trade derivatives, can you get some efficiencies there? Which at the end of the day, especially when you think about a liquidity provider, risk is what they're showing on the screen, and they want to get as much return on their capital wherever they have that posted as possible. And so if we're able to do this right, all it means is deeper and tighter markets, better price discovery, which ultimately just benefits the end customer at the end of the day. So, we're really excited. Long list of things,
Sure.
lots to do, but really excited about what we have in front of us.
I'm curious, as outside of just crypto assets, there's a lot of tokenization happening. So tokenization of commodities and things like that, real estate, securities will be tokenized as well, stocks, all that. And you have this 24/7 trading market that is global. Are there plans to expand eventually to things like that, including NFTs and so forth?
So I think we'll definitely take a very interested approach. When it comes to it, clearly, we have a market and we have a clearinghouse, especially when it comes to derivatives under the CFTC. So where there's ways for us to expand that outside of crypto, those are things that we may look at. I would call that running. Maybe right now we're walking. We need to walk. We need to maybe need to jog a little bit, and then at some point we'll be able to get to run. So if there's opportunities for us to trade other non-crypto style derivatives or even clear other non-crypto style derivatives, those are things that we'll look at when the time is right. But I think right now, it's easy to say that I think our focus is right now just on cryptocurrencies. NFTs, as you mentioned, they provide a completely separate challenge in the sense of a centralized marketplace, given the non-fungibility of them is definitely a little bit trickier for a lot of different reasons. But we see platforms out there that are servicing the market, and we'll leave no stone unturned. But right now, I think cryptocurrencies are our focus.
Mm. So let's talk about the crypto market. Certainly, we're in a bear market now. It's crypto winter, but it's all market cycles, right? We've had bull markets and bear markets, and you layer on top of that, the Fed is fighting inflation, raising rates, so it's pretty painful out there. I know these questions are hard and it could be subjective, but when do you think crypto winter may end and maybe we see spring? Do you think it's like 2023?
Well, I think you have to define, the winter and the spring, and I think it depends on what lens you're looking at. I mean, clearly, if you're looking at it through the price lens, we're in a winter. I'm certainly not going to make any sort of educated guess on where the price is going, because if I was good at that, I probably wouldn't be sitting here talking to you about running an exchange. I'd probably be trading. So I'm not going to make any attempts there. The lens that I like to look at it through is just how much interest are we seeing,
Mm,
and interest specifically in the institutional side of the community. And I think what we're seeing there is growth. So I don't even want to say I don't know if we've ever been in a winter. Maybe there was a small time, but I think in general, what we're seeing is just constant growth in terms of institutions that are interested in getting in crypto. And I would say more than just interested, not just hey, who are you? Tell me what you do. Okay, that's great. We'll talk to you in a year. But they're more of we want to invest, or we have a fund, or we're doing this. We'd love to use your platform. So it's more real interest. And so with that, I think we're already in that spring. It's just price. The pressure on price certainly makes market volumes look small because everything is measured notionally as an
sure.
example. But if you measure it in terms of volume or shares or contracts, like a lot of the other places measure their volumes, specifically a lot of Cboe's platforms, it's very possible you might see growth.
Mm,
There might be more trading happening. It's just the trading of each of those contracts is worth a smaller amount. So it all depends, I think, on how you look at the data. From Cboe Digital's perspective on that note, we're seeing a lot of growth both on the notional volume traded level, but then also on the contracts and the amount of trades that we're seeing on the platform. So I think that speaks to the point of the conviction we're seeing from our partners and industry players, and then also that interest or that increasing interest from the institutional community.
Um, now there's a lot go. We touched a bit on it about FTX earlier, but I would love to get your thoughts on the impact this has on the industry. Do you think it sets us back a little bit? We take a couple steps backwards. I'd love to get your thoughts on what took place there.
Yeah, and I think it depends on what party maybe you're looking at when you think about whether we take a step back or not. And so, I specifically look at retail and retail adoption of crypto, retail belief in centralized exchanges or holding Bitcoin or the value in it. That there's clearly angst and concern, anxiety, flight to safety. Bank runs, people are calling them. So I think that's certainly, unfortunately, a step back. And so confidence needs to be reinstilled with those investors in order to bring them back. Some of them lost some money, some of them lost a lot of money, whatever it might have been, whether it's either within FTX or just as part of what we've seen in terms of price movement since the top near 70,000. So we need to reinstill that confidence, and that's going to take time. That's not just something that's going to happen today or tomorrow. Part of that is going to be them seeing change
Mm,
and understanding why the change is good, and then also them having a better experience the next time they come back. And so it's hard to put a timeline on that, but I definitely think it's to your point. I think a few steps forward, a few steps back, and I think in general we'll continue to push, but certainly a little bit backwards. From the institutional side, I think I'll go back to my point on the crypto spring. I don't know if it's necessarily a step backwards for institutions. There's certainly institutions that have exposure and that are dealing with what we've seen over the last 6 or 8 months. But a lot of them tend to be very sophisticated in nature. If they're in the U.S. and they stood up offshore entities to be able to access these markets, they've done so, understanding what the risks are, and hopefully have very prudent risk management policies in place, so they maybe have limited their exposure or risk. But I still think even in the midst of that, the interest outweighs the pullback. So I think net it's still really growing. But I think, and then if you look at it from a regulatory lens, that there's clearly this call to action, this need for us to figure this out. And I don't say that it's any one person's job. it's not just the regulator's job. It's not just the lawmaker's job. It's not just the participants' job. It's us as an industry. We have to work together, and we have to do this because at the end of the day, it's going to benefit those institutional customers. It's going to benefit those retail customers, and it's going to help them see that confidence and move forward. So I do think it's going to be a little bit of a step back from a regulatory perspective because there's going to be a lot of questions. There's going to be more oversight. There's going to be more concern, and a lot more eyes on anyone that's operating in the crypto landscape. But ultimately, I think it's going to prove to be better because I think we exit it in a much more structured, a much more maybe mature market position when it comes to rules, regs, oversight, disclosures, things like that are, again, I think going to instill confidence in the end users.
Yeah, absolutely. And I think the silver lining to your point, after this collapse, we saw a lot of exchanges rush to put out proof of reserves and Merkle tree audits and all that, and to highlight, hey, our books are in order. And it's almost like, well, why wasn't this out there before? Why wasn't this standard there before? But you live and you learn. But to your point, it raised the threshold of transparency and what maybe folks would want to expect or to see from exchanges.
100%. I think we'll see that grow, right? I think every platform is different, every exchange is different. Customers in certain regions of the world or based on their exposure might have different needs or wants or desires. And so as we all collectively come out of, call it, what's happened over this last year, it's what else can we provide the customers that are going to help them, right? So we have to listen, we have to understand what their concerns are, and then we have to figure out how to develop that. Proof of reserves is a perfect example, or the Merkle trees, and I think there'll be more. I think proof of reserves is just a snapshot. It's just one view in terms of balance sheets. Publicly traded companies such as Cboe, we have third party audits. And we have to disclose our financials. So there's different ways to approach it depending on who what company you are and where maybe you're structured and based out of. But ultimately, I just see that transparency, I think, is going to grow. And it's only going to provide benefits.
Do you think it makes sense to have, and you alluded to it before, it's not just the regulators, not just the lawmakers, but we as an industry also have to do some policing and raise our standards. Do you think it makes sense to have some sort of association where you have these exchanges and we self-police a little bit? Like there's a representative from, I don't know, Binance and Coinbase and whatever it is, and there's someone from Cboe, and we're self-policing, and this way it's not the regulators coming down with a heavy hand saying, you guys know what you're doing, and this is what we have to do, but we can collaborate better with the regulators.
Yeah, and I mean we might see something like that as the guardrails and that regulatory clarity comes out. That's still TBD. I think you see that clearly. SEC registered exchanges are SROs, self-regulatory organizations. So they have rules, they have compliance and regulation teams, market regulation teams that are policing not only the exchange and making sure that the exchange is doing what its rule set says, but also that the participants are doing what its rule set says they're allowed to do. And so to that end, we also see that in the CFTC landscape under the principle-based approach. And so we, at Cboe Digital, given we're under the CFTC jurisdiction for our futures business, we already do that. And we actually, as a best practice basis, take that mindset and apply it to spot, right? So we have a spot rule book, it's published, we make our members read it and sign it. And then we police for it, so it's not necessarily something we have to do, but we look at it and say, this is best practice. We already have to do it for the CFTC, so let's do it in spot. This is where we think the industry needs to go and the right way to do it. So is our way the perfect way or the right way? I'm not going to say it is. It's one way, and there's probably other ways that we can do the exact same thing. And I think to your point, ultimately we will get to a spot where, at least in the U.S., you'll have these platforms, these exchanges, and the participants that are interacting with them all playing in that sandbox of self-policing and kind of regulation. On the international side, that's clearly a bigger deal
Sure.
and requires, quite more conversation across a lot of different regulatory bodies. But who's to say that that's not, doable, an association or something, especially if it's best efforts, or, given international regulation across multiple jurisdictions is probably a difficult thing to think about. There's certainly things the industry can do willingly, I think, to drive that confidence and drive the industry to a better spot.
For sure. Another tough question for you here, and it's on crypto regulations. There's a lot here. You got Biden executive orders. You got the reports that came in from those executive orders. You had different people in Congress, release bills. The Lummis-Gillibrand bill is kind of the one that has the most attention right now. There's stablecoin regulations apparently being worked on. The SEC Ripple lawsuit is a high profile lawsuit everybody has their eye on because it impacts all coins outside of Bitcoin. What are your thoughts? You think 2023 may be the year, given that there's also this huge catalyst of FTX collapse, that these regulators and the lawmakers are going to finally get this going?
That's a great question. I want to ask you the same thing. I don't know if I don't know if I can put a time box on it.
Sure.
Clearly, I think there's certainly a push. We just wrapped up midterm elections. You have new members entering both the House and the Senate. There's likely going to be some shifts in committees and who may or may not chair different committees. So I think until all that kind of settles, it's hard to kind of maybe see light at the end of the tunnel for something to actually get through. But post all that, is it possible that we see something in 2023? Sure. Do I think that the events with FTX, maybe apply some speed or some pressure to try to do that? Sure. I don't know if it will impact the ability for that to happen. Clearly there's bipartisan bills on both floors, to your point that you mentioned, the Lummis brand and some of the other ones. But still, I think where we sit today versus where we'll be called in February or March or even beyond that in 2023, it's I don't think we see any sort of immediate action, but sometime in 2023, I think, sure, I think it's probably fair. From our perspective, we engage with all the parties, whether it's the regulators, whether it's folks on the Hill, to make sure that the platforms are sensibly and sufficiently regulated. And that's really, I think, the guardrails we want. All the nitty gritty in between, I think we can solve once we get there, right? If you think about how markets have evolved over the years, the market structure and the rule sets that everyone operates in today wasn't in 10 years ago, 20 years ago, 30 years ago, 40 years ago. It's been an evolution. So let's get something out there that allows participants to operate, and then let's iterate on it and let's make it better.
For sure. Final question here before we hit some fun wrap-up questions. Every central bank around the world is working on a CBDC, a central bank digital currency. There's talks of the digital dollar here in the US. What are your thoughts on that, and how that may change markets given money's tokenized on the blockchain, more transparency, maybe, I don't know if the right word is velocity of money, but what are your thoughts on those upcoming CBDCs?
Yeah, I like the way you framed it, the velocity of money. I mean, clearly there's a lot of advantages that cryptocurrencies bring to the ability to move funds around in a more instantaneous, if you want to call it that, manner than you can if you want to move USD or Euro or whatever it is around. So, clearly there's the bridging of the gap of that and allowing folks to have access and ease of access and movement of whatever currency that central bank is responsible for via that digital dollar. From my perspective, I'm a wait and see approach. There's a lot of folks that are heavy pros on it. There are a lot of folks that are maybe against it. I'm probably in the middle and more of just the camp of I love reading about it. I love seeing different sides of the fence place their arguments, and I love to see how the governments and the central banks are thinking about it. Ultimately, I see financial markets digitizing themselves over time.
Mm.
Which markets are first? Who knows? I would probably expect more opaque and illiquid markets to go first, only because there's a lot of benefit there. I think more than maybe very liquid, very robust markets that are already really really efficient today. And so how a CBDC works with that, I think, is really interesting. So I'm certainly going to be reading along with you as they do it, but no strong opinion either way.
All right, John, I got some wrap up questions here for you. So first is rapid fire. Favorite food,
Ice cream,
favorite musician or band?
Foo Fighters,
Love Foo Fighters. Favorite movie?
Top Gun, the first one. Though the second
Uh,
one, the new one was pretty good, I got to say.
it was decent,
But
yeah.
I've been a Top Gun fan. I don't know why. I just love the movie, so it's cool.
Yeah, it's a classic. Favorite book?
Um, I'm gonna pick. It kind of goes with my favorite band, Dave Grohl's autobiography. My wife got it for me, I don't know. I can't get enough about Foo Fighters, so maybe that's why.
I got to check that out. I am a Foo Fighters fan, but I have not read that, so I'm definitely gonna get that.
Get it on Audible. He self did it, so it's
Oh
cool.
wow,
Yeah.
nice. Okay, I'm doing it right after this. And what's your hobby when you're not, working at Cboe?
So I'm a triathlete. So I do the swim, bike, run thing quite a bit.
Wow,
So that's so besides SIBO and family, I fill the rest of my time with training. So that's the hobby.
very cool. And finally, if you could create your own metaverse, what would the theme be? And maybe it's something with the
I think
marathons or something.
yeah, I think you know exactly where I'm going. I had to think about this one for a while. Yeah, I think it would be some sort of immersive experience that lets me train anywhere in the world, right? So wherever that is. And I don't mean like I'm sticking an Oculus helmet on my head and then sitting on my like indoor trainer.
Right.
I mean like a really more immersive experience than that. That to me would be where I'd want my metaverse to go.
John, pleasure chatting with you. I'm excited to see the future updates with Cboe. Thank you for joining me.
Thanks a lot for having me, Tony. It's been a pleasure.